What if I say the thousands that you invest right now will turn into lakhs and crores in the coming years? Does it sound interesting? It should really sound interesting, and that is the power of compounding. In fact, it is also called as the magic of investing, and maybe even called as the eighth wonder of the world by a lot of financial analysts all over the world. So, how can you implement this magic in your life? And that is what we are going to implement in this video. And if you're new to this, make sure you like and subscribe to this YouTube channel. So, how does compounding work? Let's crack it in simple terms with simple life experiences. You might be thinking, market is going up, going down, it is absolutely fluctuating, and how can you generate compounding out of it? And that is what we are gonna see, the basic form of compounding. Imagine you have started off by 100 rupees as a base margin, and you got a growth rate of 10%. So 100 is your base amount and 10% is your growth rate. So after the end of your first year, the total value that you will be having will be 110. 100 rupees base price and 10% growth, which means 10 rupees. So 110 will be the final product after 1 year. And you move on to the next year, instead of having a base price of 100, you will be having a digit of 110. And the growth rate, if it is still giving you 10%, then the return that you're gonna have will be 121. A bit confusing, 110 the base price and 11 rupees will be the growth that you have earned for that particular year. And with total of that, 121 will turn out to be your final product. And the same thing will carry on for the next year. Just like the base price will be 121 and 10% of growth will give you 12.1 rupees, which means the final product will be 133.1. So it started off with 100 rupees. After 3 years with same growth rate, it is giving you a product of 133.1. And this is how the compounding works. So here, what you got to understand is that with the same growth rate, the earnings are increasing year after year. On the first year, it gave you 10 rupees as earning. The second year, it turned out to be 11. And the third year, it turned out to be 12.1. And this is how it keeps going year after year. Just like what you have seen in the chart, on the initial years, the growth rate will be very slow. And after 15 to 20 years, the growth that it is going to produce you will be absolutely high. And that is what that is absolutely implemented in the chart. 5 years, it might be on a slow track, but after that, that jump that will really provide you and help you to achieve that financial stability. And if you are in the 20s or 30s, make sure you start investing with at least 500 or 1000, whatever possible in your hand for the long term of 15 to 20 years. And if you do that, you will absolutely experience the magic of compounding. Now let's look on the Nifty performance year on year from 2000 to 2022. This Excel sheet will really help you to understand the performance of Nifty. If you look at in the year 2000, it has gone down to 14.65%. So start off with an example by imagining you had invested 10,000 in the year 2000. Okay, it had gone down to 14.65, which means you would have lost 1,465 rupees. So the final product after the end of the first year will be 8,535 rupees. Well, you might be thinking it has gone down 14% and how does this compounding work? Let's go into the next year. And the year 2001, it even fell heavily and it ended up with 16.81% down. Obviously, the principal amount would have come down and it would have been at 7,154. So what really happens in the market is obviously after seeing 2 bad years, all the retail investors might be thinking market is not the good place to be in. And they might take their money back by feeling panic, and at the same time, they might start investing in different criteria afterwards. But see what happens in the coming years. On the second year, which means on 2002, it gave a neutral position of 3.25%. Obviously, it wouldn't have given you much growth. But if you look at the next year, that is 2003, it gave you a big profit of 71.90, almost 72%. Imagine 72% return on the capital. And that is where absolutely the compounding works. On the first year, you lost your money. The second one, it was the same. The third one, it turned out to be neutral. After 2002, your principal amount would have been 7386. But after that 72% on the very next year, it helped you to gain percentage. At the same time, your principal amount moved on to 12,696. And this is how everything works over there. And you might be thinking about the 2008 crash. If you look at the 2008 crash, it almost fell to 52% there. And on the very next year, after 2008, on 2009, Nifty moved up to 75.76%. So this clearly shows that Nifty cannot be restricted by any X factors, and that is what we have seen throughout it. Imagine you start off with 10,000. After happening all such things, it would really give you end up with a return of 1,26,908 rupees. And the same example can be tracked out from what happened in the year of Nifty, where everyone mentioned that in 2020 Nifty was going to a bearish mood, but even after having that COVID crash, Nifty ended up with 14.17% up. That really shows Nifty is only going to boom in the coming years. Just like mentioned before, after the power of compounding throughout all the years, after having losses, after getting some good bonus points, it covered up, and after 22 years, imagine 21 years, the 22 year is running now. So after having all those 21 years, the base amount of 10,000 has been converted into 1,26,908 rupees. Can you understand the compounding power here? From 10,000, it's been almost taken to 1.26 lakhs. And that is how the magic really works behind this. Now, how the people will sell you compounding is that they might be telling you, if you had invested 10,000 back in 2000, it would have given you a return of 1.26 lakh in the year 2021. From the year of 2001, after having a lot of losses, with a dip of 52% in 2008, with COVID crash, all such things, summarizing everything on a single go, from the year from 2000 to 2022, the growth rate for you is 13.54, and this is absolutely magnificent and clear indication that Nifty is showing its strength throughout in every difficult circumstances. So if you haven't started investing, make sure you start your investment plans to understand and experience the power of compounding and why it is called as the eighth wonder of the world. You can start investing in ETF just like Nifty B, Nifty IT, Nifty Auto, Nifty 50 and so on. And at the same time, you have alternative options just like investing in mutual funds, SIPs and so on. So make sure you invest